Are you sure you're trading an order block? Or maybe you're just falling into a trap every time, a trap where the market maker is waiting for your liquidity? Most traders confuse a breaker block with a regular order block. They see the last candlestick before the impulse, enter, and get stopped out, because it's not an order block. It's a breaker, and its job is to break your expectations. In this video, I'll show you how to avoid falling into this trap. I'll share my trading plan, how to distinguish a breaker from a valid order block, where to enter, where to set a stop, and how to read price behavior before the movement begins. If you want to understand the market rather than guess its behavior, watch until the end. To avoid falling into this trap, first you need to understand how it works. What is a breaker block? Why does it appear? And why do most traders not even realize that it is not an order block? Breaker appears at the very moment when most people confuse it with order block. Almost everywhere it is written that an order block is the last pullback candlestick before the impulse. But this is a misconception. This is exactly why breaker block works. Let's say you highlight the last upward candlestick before the pullback. You see a downward impulse and think that the market will return to this zone to push off. You highlight the zone, prepare to short, but the market simply goes higher, breaks through your zone, and catches you on entry. Because it's not an order block, it's a breaker block, a trap designed to collect such entries. It looks like an order block, but works in reverse. It draws out liquidity and triggers a movement in the opposite direction. Remember, a valid order block should withdraw liquidity and trigger movement. A breaker is a broken order block that has been broken through. It was originally part of the manipulation. If you don't understand the context, don't see the withdrawal of liquidity, you will repeatedly enter zones that should not trigger a reaction. If you want to understand how an order block actually works, I have a separate video with examples, conditions, and structure. And here's the most important thing. You don't just enter the market. You enter at the moment when someone is already in position, gritting their teeth and watching the drawdown. And you calmly, according to plan, go in the opposite direction. Not because the time has come, but because the logic has come together. Breaker is not just a zone. It's a way to use the crowd's mistake and turn it into your own scenario. It exists because the majority doesn't see that there was manipulation before. They see a nice candlestick and enter where you are waiting for liquidity. You don't predict the market. You're taking advantage of collective misjudgment. This is the logic of smart money, to use the liquidity and patterns of the majority of traders. Now let's figure out how to actually find a breaker block and what is most important in it. I want you to understand not just the pattern, but the logic behind it. Because if you understand the essence, you will no longer look at the chart like most people do. Imagine that you are a market maker. Your goal is to build a large position, but you can't just do that. You need to make others give you liquidity. You start with a breakout. You break through the minimum, remove the buyer's stops. Everyone thinks it's a breakout. Panic starts, the crowd starts shorting, and you're already long because you use this breakout to build your position. Now, those who supposedly trade by smart money get involved. They see a good candlestick, call it an order block, wait for a retest, and think it will trigger a reaction. In fact, this is another trap of ours. They entered exactly where we wanted them to. The price goes up, the structure breaks down, and within this impulse, an imbalance appears, an area where the prices move too quickly, but it's ineffective to trade the entire imbalance because it's too wide. That is why we need a breaker block, to find the exact area from which the market maker will close unprofitable shorts. Let's mark this zone. This is where the market maker returns the price. After all, in order to close a losing sell position, you need to buy back. This means that the price must return, but not just anywhere, specifically to the breaker block zone. Breaker is not just a candlestick. It is a tool that large players use to first lure you into a false movement, then uses the crowd's liquidity, and finally closes their old trades, moving the price further. If you think like the crowd, you will enter the order block. If you think like a big player, you will wait for the breaker. Now, let's figure out how to trade the breaker if you really understand its logic. Not as a pattern, not as a level, but as a scenario in which everything is built in advance, from price behavior to the entry point. When I trade the breaker block, I don't think in terms of there is the pattern, it's time to enter. I think in terms of a scenario. What is the price doing and why? If I see that the market initially knocked out liquidity, that's the first signal. Sellers entered and the market broke their stops. Excellent. Now, it's important to me that the price doesn't just rebound, but gives an impulse that will leave an imbalance. If this impulse breaks the previous structure, even better. It means that the weak ones have been shaken out and the direction has changed. That's what I need. Now I'm looking to see where the market will return. If the price returns to the very same order block that was broken, for most people, it looks like a level. But I know that this order block has already been broken. Now it's a breaker. This is what the entry zone looks like. Pay attention to the structure. I highlight the zone, breaker plus imbalance. I wait inside it for the entry point, not because of the level, but because it makes sense for the market maker to return the price here in order to prepare for a new impulse, already upward. And in this scenario, I take the trade according to plan, without rushing. You begin to see how everything is connected. The price doesn't move randomly. It follows scenarios created by those who have volume. And your task is to fit into the scenario once it has already started. I trade such scenarios manually, but I understand that not everyone has the time and experience to sit in front of the chart every day. It is for such situations that I created MiloBot PRO. It is not smart money, not breaker, not a guessing game. It is an automatic trading strategy that I have been developing for over 4 years with clear entry algorithms. The account on which MiloBot operates has grown from $34,000 to $272,000 over the past 4 years. And you can check it yourself. The statistics are available on my FX book. If you want to test it, just download the demo version, run it on historical data, and see how it trades. The link is in the description below this video. Breaker is not a magic pattern. It is not a button that says, enter here. It is an attempt to understand the logic of the market, to see where the crowd is losing money and why, where the market maker is luring them into a trap and how exactly. Breaker is the moment when you no longer act at random. You don't wait for a signal. You see the whole scenario. Liquidity withdrawal, reversal, return, breakout. You don't just trade the chart, you read the plan. And if you want to master this, don't start by looking for an entry point. Start with history. Scroll through the chart, see where the market broke through zones, where the crowd entered and lost. Understand how it repeats itself. See the mechanics. Because real trading is not a reaction. It's preparation. It's a plan. And if you like this approach, please give it a like, subscribe, and write in the comments what topics you would like to explore next.